All right, so we see it right there, 340. Okay, remember I said I'm gonna start my orders just below 340, and it pushed right up to right below this liquidity, and now it's all dumped all the way back down to 334. Okay, so that's a take profit. 334, 335, take it. Take it. Now, not saying it can't dump all the way back down to the VWAP at 328 to 330. Not saying it can't do that. But again, we're looking for the highest probabilities. You know, in that situation, what you can do is say, hey, I want to just take half off at 334, 335, and then save a quarter or a runner, just a runner portion for a dump down to 320, 328. Okay, can't blame you. No, can't blame you. Isn't that crazy? mRNA is really working inverse of the SPY today. SPY dumps, mRNA pumps up. SPY starts pumping, mRNA starts dumping. Yeah, that's interesting. All right. Okay, does anybody have any questions on this mRNA play and why I entered right here below 340 and said I would even add if it pushed to 342.
What was your limit order for that mRNA?
So 339.70, right around 339.70 is where I start the order, and then I'll add 330. The way I like to be super safe, what I'll do is I'll start it in this example 339.69 cents. I'll start there, and then I'll just incrementally add at 339.75, 339.80, 339.85, and then usually 339.94. Okay, so that'll fill all of the orders, you know, or most or all of the orders on that side of the liquidity, and then if it wants to pop through the liquidity, I look for the next major level of sellers, which in this case was 342. So I would have started orders. If it would pop through it, I would have started orders at 341.69, 349, 341.74, and same on. So
did it get filled? Because it looked like that green candle there and never reached, you know, was that 339.46, right? Did your order get filled?
Hold on, let me check my screen. Let's see here. No, actually, whoever that was, no, actually, I did not. I did not get my feel on that. I apologize.
So when you do this, you do an OCO order. Let's say it's assuming it's filled, and then you set a profit target already, like $2 a dollar away.
Yeah. So honestly, that was, if I would have came in here and looked at the dollar or the 50 cent or the dollar increments, normally what I do is when I see something like just happened on mRNA, which I got two things. My brain is not working as good because I'm trying to do two things at once. But normally what I'll do is if I see sellers starting at 339, in this case, we had sellers starting at 339. So $1, that's why a lot of times when I send you the range, when I send out the range, so in this case, the range would have been 339 to 341. And really they had those sellers at 342. So that really needed to be the add spot. So that's why I like to send a range, because if I see sellers at 339, just below the major level at 340, I'm totally willing to start adding in between there, which, you know, unfortunately I wasn't paying attention. I didn't add enough orders in there. I just had orders sitting at 330, 339, 80, 85 and 339.70s. So, but at the same time, you know, if I see the liquidity there, the sellers there at 339, just below the major level at 340, I'm willing to add in between that whole level. That's why I send out the range. Now, granted, you know, I want the bulk of my orders to get filled just below the major liquidity level. But at the same time, I don't want to be left. I don't want to be left like I was in this case without getting orders filled. And yes, as far as your OSO, all right, so let me, I'm gonna flip back over to my TradeStation screen. Okay, can you see my TradeStation screen?
If he thinks this is a one-day thing, or if the market's gonna start tanking next week.
It's
All right.
behind your trading view screen, so cannot see it.
You can't see this right here.
Just saw a small portion of your, yeah, I guess so.
Okay, all right, yeah, well, this is all you need to see. Okay, all right, so prime example right here. Okay, so this is where I would start. I would start the order, say I'm just using, say you just want to, you're just doing small, you want to do $5 or five share orders. Start here, add in the 370s, add in the 380s, or 339.90s, all that. So you have that set. But again, if you have a major liquidity at 339, oh, I apologize, I ain't got the OSO orders. Okay, so OSO orders. So OSO orders here. Okay, as you can see, an OSO order, if you're not familiar with OSO order, okay, order stop order. So what happens is when I put these in, it's going to put my limit order, it's going to put my take profit above, and it's going to take my stop loss above, and then my take profit below. And this is now, if I was buying, then it would do the opposite. So in this situation, if it's one of those that you can't watch, you can't be watching, OSO orders are extremely valuable. So in this case, you start, say you put it in here at 339.80, your entry here at 339, and then on our average plays, it's $1.55 over the liquidity. So in this case, it's 340 liquidity. So the stop order would be 341.50, 55-ish, somewhere in there. And then your take profits, $2 to $5 below the liquidity level. So do we see how, any questions on setting up an OSO order? No questions. I'm pretty good. Oh man, I keep. Well, I would be kicking myself if I would have missed that field on mRNA during my personal trading. Man. Yeah, that was an easy one right there. Easy. Now, if there would have been no sellers, prime example on mRNA, if there would have been no sellers at 339, because a lot of time on the liquidity levels, there's not, you don't get a lot of liquidity, a dollar below the major level. A lot of times it's just the major level, and it's, very easy just to put your order in just below. But if you have a situation where there's also sellers $1 below the major level, you want to be willing to start your position. And in this case, between 339, or even if you want to start it just below 339, just to be safe, 339 up to 340, that's where you want to be looking to start your position. But again, you got to make sure that you're dealing with a major level. And again, when I zoom down to the $5 increments on mRNA, 340 is a major level. As you can see here, once you zoom into the zoom out to the $5 increments, huge liquidity at 340, decent at 345, and another big one at 340 or 350 rather. So I don't get too greedy when I find a major level. And there's also people trying to step $1 in front of it to start taking profit. I would gladly add in the 339 to 340 range.
Yeah, so at this point it's 10:38. So my suggestion is, if you were day trading, you start, slowing down your positions, you start setting alerts, because the movements will start decreasing now, right? You won't be seeing those jumps as usual. So right now you start setting up a lot, start slowing down your trading. Otherwise, what ends up happening is you tend to give back your profits. So that's just a recommendation.
No, that's an extremely good one there, Ayo. And like I mentioned the other day in the server, I have alarms set on my alarm clock for trading. So yeah, it tells me when the market slowdown, the historical market slowdown is about to take place. Which let me see. We're about 20 to 30 minutes. Yeah, about 20 to 30 minutes away.
Just a quick question. My understanding is that today is the short day. Market closes at 12 today, right? Is that?
Oh, yeah,
right?
yeah. Excuse me. I'm glad you reminded me of that. Yeah, today is a short day. I cannot remember what time it closes, but this is not a full trading day. So
does that mean that when it comes to options too, that everything dies at when the market closes? Because I'm just thinking of selling some options right now. I just want to know how quickly the premium will decay. That's why I'm asking.
Oh, yeah. No, I mean, that's, yeah. I mean, if like I said, I don't know the exact time. If somebody wants to help me out with that, I appreciate it. The exact time our market close is. But really, once you get into the last 2 hours, the last 2 hours of the market open, man, that's when you can really, oh my goodness, the decay. Oh man, you can really, as far as credit spreads and stuff like that, you can really start taking advantage of some decay in those last 2 hours of expiration day. Like with Tesla, man, we've gotten Tesla numerous times over the past year. So what we'll do is we would let on expiration day, Tesla, it would, a lot of times it would like to pump on expiration day Friday. And what we would do is let it pump, because on average, Tesla, when it's not crazy FOMO like it's been here for the past month or so, it likes to pump on average about $30, $25 to $30 is usually about where it tops out on most days. So what we would do on Friday expiration day, we'd let it get around that $30 pump. And then we would do bear call spreads about $10 above that. And then just let it decay for the last couple hours of the day for some very easy money. So yeah, I love taking advantage of credit spreads, because again, you get theta decay is working in your favor. It's, so you got expiration day, theta is working hard, and you get to give yourself a cushion. So instead of having to buy the stock at the exact price that it's at, say it's at 350, well, you can actually move your credit spread $5, $10 above the current price. And as long as it stays below that price, you get max profit. So it's it's an extremely powerful strategy on overall, and especially too on expiration day with theta to take advantage of. Okay, so what do we have happening here? All right, so we got our SPY bounce. All right, guys, so looking at SPY, if you can move over to my, tell you what, I'm gonna make it bigger. All right. So this is what we've seen on SPY so far today. All right, SPY pushed up, rejected right at our 363. 69 algo right here. Proceeded to dump all the way down, and we got our bounce here. So really 1, 2, 3, 4. We had 4 1-minute candles. Candles interact with this algo here at 359. This was a double algo. When I see a double algo, it just gives me even more confidence that we're going to get a short to medium term bounce. And from there, SPY is now pushing back up to the VWAP. And not looking good. All right, mRNA is pushing back up as of right now, 336. Now, I don't oftentimes recommend re-entering a lot of stuff, because the more a stock hits on a major level of liquidity, the more likely it is to absorb and push through it. But with that said, 339 to 340 is still loaded with liquidity, and then 352 above it. So I'm going to go ahead and put in OSO orders. Again, I'm going to use small order sizes. Y'all can see this here. So starting my first order, starting the first portion of an order right here at 339.67. OSO 339.75, 339.87. Really 85 is better. And then 335.95. And I'm gonna bring a take profit down here at 338.40. Okay. Did you see how I set up that see how I set up the OSO order, the ones that are using shares there?
So you put a stop loss on this one, 341.95?
Yeah, so I mean, it automatically puts it on there for me, but honestly, no, I'm not going to be taking a stop loss at 3, because again, there's a big band of sellers at 342 in the event that it pumps through the 340 liquidity. So it would make no sense for me to take profit at so I'm going to put the stop loss $1.55 above the 342, because I will be adding if it pushes up to 342. No, the last thing I'm going to do is take a stop right in front of the next major level of liquidity. That's the worst place to take a stop. That's why a lot of people, they mess up. They get out right before the stock turns around. Well, if they had the order book, they'd see that there was a big level of liquidity right there just when they were getting scared and starting to tremble. Well, there's another major level right there to help them out, but yet they get out too quick. All right, SPY starting to dump at the VWAP. We see here it came up just below the VWAP. And again, you can't, say you wanted to short here, you can't short at the penny, the exact penny of the VWAP. You have to be, you have to give it some cushion. You got to give it 10, 15 cents. Because again, if you put all your fills exactly at liquidity levels. All right, so we got our push on mRNA. About to get some orders filled here. All right, got some fill. Fill me some more. I'm gonna drag some down just so I get some fill. So I got my 360 orders filled. All right. dumped back into 338 a little bit, missed the fill there. Let's come on, fill. All right, more fills. All right, taking some profit, 338s. All right, all of them got filled. 338.43, down to 338.43. Taking it, should have kept some of them. So dumping all the way back to the V, or my moving average here at 337. Again, I forgot I'm playing with mRNA, much more volatile. It's easy to get $2 to $5 swings really, really quick. But if we'd have been playing something like an NVIDIA, 338, when volume's not that good right now, smart target. Oh God, I feel so stupid now. Look at that.
And you see
Three. Man, why didn't somebody remind me I was playing mRNA? There ain't God.
And you see that's how you get those easy wins, right? Like I just took another $2 off it.
Oh,
I think
so
I've
you got
like 6 points.
you got it
today.
You got an mRNA with me?
I did, yes. Yeah.
Okay, all right, good man, good man.
Like
All right.
it's so predictable, so it's really nice though. So
Oh yeah. So again, and in the situation is it could have pumped through the 340 liquidity, but I guarantee you it would have hit a wall at 342. So again, that's why, I'm not going to put all my everything that I have just below the liquidity at 339. Again, I want really, in my mind, if I cannot double my position, let's just say this was worst case scenario. Now, again, I wouldn't recommend this to everybody. Hey, take your stop loss in this case, one at 340, 350 in the event that it pushed through 340, 342. Take your lick in there at 350, 350, 350, 350. But for me, I know that I got at least I'm already set here that I'm going to add at 345 too. Because what's going to happen, let's just say worst case scenario, it punched through 340, 342. I'm adding at 340 to 345 big time. And then what's going to happen? So take for instance, say I got an equivalent of say 100 shares, 100 short shares between 340 and 342. Well, when it gets to 344 to 345, I'm adding another 100 shares right there. And what's that's going to do? That's going to bring my break even up to around 342.50. And then what's going to happen, because I've seen it countless times, the times that it does happen like this, is it's going to hit 345 and it's going to come back and test this 342 liquidity. So I'm going to get a small winner or a break even. So I don't lose very often because, like I said, I've watched the order book countless times. I know how the game works with the computers. So, and honestly, more times than not, let's just say more likely, this would have been more likely the situation. It pushes through 340. It pushes up to the 342 liquidity. I'm adding just below 341.60, 341.70. I'm adding all up in there. Okay. And then what's going to happen is it's going to hit this and it's going to dump back to 340 and retest this liquidity. So I brought my break even up to around 341. So I'm going to get a break even or a small winner at worst. And a lot of times, honestly, what it'll do is it'll hit 340 and it'll come back to it'll hit 342 liquidity, come back, retest 340. And at that point, you're 50-50. Okay. You can take your break even, or you take the 50% chance that it's going to dump right back down through that 340 liquidity. So honestly, I'd say that's probably more about 60 to 70% that it'll hit this and just dump back through, especially if there's not a lot of volume in the market. Now, if the whole market is pumping, because again, there's a lot of variables that you have to take into consideration. If the whole market's pumping like crazy, then yes, I'll take my small profit back here at 340 just to be safe. But if the market's slowing down, volume is starting to slow, and I see it reject here at 342, hey, I'll take my 60 to 70% chance that it's going to fall back through 340 and continue the original dump that should have happened at 340. So I hope that's as clear as muddy water for you. So with that said, I did get all my orders filled on the mRNA liquidity. So in this instance, it pushed up to 339.94. 94, 90, 93, 94 in there. Again, that's why, again, like I said, I like to start the orders at 339.69, 7, and then the 74 or the 74-cent increment, the 84-cent increment, and then the 94-cent increment. With that said, a lot of this detail is all going to be in the the precision indicator course toward 2.0. So that's where I'm going to take the time and really just put a lot of that detail in there. All right, mRNA pushing back up to the 340 liquidity. Tell you what, I'm gonna it still has a ton of orders to fill there. So I'm gonna start shorting it again. And honestly, I'm hoping it pushes through 340, even though I'm starting short here just below 340. I'm hoping it does, because I really want to add at 342. But I will be quick. This is the third test of 340. Okay, first test, it's your 9 out of 10. Next test, you're about 6 to 7 out of 10. Third test, now you start getting to 50 to 60% that it's going to push through it. All right, got partial order field on mRNA. Taking this time, yes, I'll definitely take it back at 338, because this is our third test of the liquidity. Oh my goodness, I'm such a goofball. Guys, I apologize. That I was starting my orders just below 339. Oh man, I got that's the price you pay for trying to educate and teach and trade at the same time. Oh, I shouldn't have been doing that. Anyway, it's all good. All right, got orders filled just below 330 as well. And let's see what I'm going to take. I'm going to be pretty quick to take these, considering I started my ad at the wrong spot. Okay, everything filled at 338. Okay, all right. So that's just a prime example that you can have mental errors of trading. So while you don't go all in, especially if you're trying to educate and think about 3 other things at once, while at the same time trying to enter orders. All right, so we got our dump all the way back to 337. So again, and that's, like I said, guys, I'm just using little five share orders. So again, I'm not trying to show off here and show that you gotta, do some monster orders to make you a nice little chunk of change with the strategy, especially when you're learning. When you're learning a strategy, you don't want the stress of, oh, never mind, I had more orders up there and didn't even realize it. Okay. Well, didn't mean to do that, but got more orders filled at 340, which that wasn't what I would have done, because this is the 4th retest. On the 4th retest, you got to realize there's about a 60 to 70% chance it's going to push through that liquidity. And sure enough, that's what it's doing as we speak. Now I will add at just below 342, because I mistakenly didn't realize I had more orders sitting at 340. All right, go ahead and push to 342. Come on, you're going to do it. Just do it. Okay, so I hope everybody understands that. Again, this was the 4th retest of 340. Okay, that is not high probabilities if you want to try to short it again on the 4th time. Okay, all right, got our 342 liquidity. Now, prime example here, just so, you know, like I say, you accidentally entered at 340. You didn't realize that it tested it 4 times, runs up to the 342 liquidity. Again, you have to be ready to add there. And in this case, looking to take your break even or a small profit back to 340 or add at 345, just below the 345 liquidity. So considering this was a mistake play, did not want to re-enter at 340 on the 4th test. That is never smart. I would gladly take it within the sense of the break even. Half of it off there. Take the other half. Just 334, 330, 340, 43. Okay. All right. mRNA pushing for the 345 liquidity. See if it gets there.
What's your average cost right now?
341. Again, I would have never, I'd have been paying attention. I would never re-entered on a fourth retest. But again, like I said, it was accidental order fill at 340. No, you
Yeah,
are
but
putting,
you see, exactly. You see what's happening now? A lot of the time, even if you do make a mistake like that, chances are you will get a chance to at least break even. But even if worst case scenario, if you don't break even, just take the loss. If you're just going insane, take the loss at $2, etc. But most of the time, from what I've been studying, like it gives you a chance to come back at least once. So that's what I've realized. So.
But again, keep in mind, mRNA is a beast. If the computer's momentum, you get computers and momentum of this thing, I mean, you can just start blasting back and forth all over the place. So honestly, you know, with something like mRNA, you don't want to push your luck. Really, 1 or 2 short scalps at a major level like 340, you start getting to that 3 and 4. I mean, you're just with something like mRNA that can just, you know, blast $5, $10 in seconds. I mean, don't forget, this was a stock that blasted from 200 to 500, you know, in a matter of weeks. So you do want to keep in mind what stock you're messing with here. All right, so she pushes to 3, 4, 5. We'll be adding there. Well, I'm kind of glad this was a mess up because this kind of shows y'all, what you can do to get yourself out of trouble. All right, there we go. Oh, I forgot to boot my orders up. Ha ha! Look at that. Oh man, look at that, messed up. All right, take them all. Okay, so that was honestly that mess up. That was the best mess up ever because that showed you exactly what I just talked to you about earlier. Okay, let's say you get in at 340. All right, you got sellers at 342. Get pulled back almost $1, about 80 cents. I could have took my close to break even there. I really didn't want to. Okay, I would, you know, I wanted it to come to me because I was willing to add at 345. It pushes to 344.73. Again, I had orders. And that's another thing too. I am willing to bring the position start down into the in this case, 344.60s like I did, because I do not want to get missed on my fills in a situation like this. I want to make sure I get my fills so I can make sure my break even gets pulled up. So we see there from 344.70, 75, somewhere there, we dumped all the way back to 339 and well,
obviously, in situations like that, right, you only do this when you see liquidity levels above. If you don't see any liquidity level, you do not just keep averaging up. That's a quick way to blow up your account. No.
Oh yeah. So AO, exactly. Again, I'm not just, again, that's why when people say, oh, you never add to a loser. Well, if you're relying on lagging indicators, oh, your moving averages and your MACD and your RI, if you're doing, yeah, you shouldn't be adding because you don't know where people are really at looking to buy or sell. So you shouldn't, you know, it's not very smart. We, on the other hand, we know where the orders are. We know where the liquidity's at. So we have, you know, we are the only people that really have the right to be adding, day trading and adding to losers, because we know where it's at. We know where the action is going to happen at. So again, do we know exactly where the dump's going to come? I mean, the exact cent that no, it's don't, but we have a very good idea that it's going to, we're going to get our dump. All right. So we see here, it's faint, but when I see a rejection like this at 345, let's just say I want to jump back in it. I want to play on a fast drop like this. I know we're going to try to get a, you know, for it to try to regain it back. So I'm looking for where buyers are starting to step in, 338 to 339.50. We can see very faintly here, buyers try to step back in, and they did step back in, pushed it all the way back up to 343. So anyway, with that said, guys, I mean, I've had it up here, all the plays that I've been playing this morning. Again, I'm using little $5 orders, you know, and just spreading them out right below the liquidity. And I'm already at, you know, $107. Now, honestly, for what I can normally do, $177 is really nothing. But let's just say you're somebody that's, hey, you're just starting out. You're trying to learn a strategy. You're trying to, you know, find something that you can make a, you know, nice little pay for a car note. Because that's the way I look at it. It's like, you know, too many people want to, you know, they want to become rich. They want to make all this money. You got to realize, hey, you know what, you know, just try to make a little side income. Try to pay for, you know, work this month to be able to pay for your car note with your trading, or pay for your house note with your, or, you know, with your trading. You know, it's, you don't need to make an income right off the bat. You know, work at the strategy, you know, get comfortable. Because if you trade, if you got too many shares, or you got too many, or you're dealing with options, a bunch of naked options, you're going to put so much more extra stress on yourself that you're not going to really ingrain the strategy into your thought process and make really good decisions. Again, take for instance, if at 340, I put in a monster position, you know, all in at 340. I mean, I'm pooping my pants. It runs up to 345, you know, especially if I don't have an order book. Can you imagine somebody that got in shorted at 340? I can all but guarantee the majority of them, they're going to sell out just when it gets to 345, right when it's about to, you know, reverse, they're going to sell out because they're freaking out. Oh my God, it just ran $5 against me. You know, whereas again, if they got an order book, they know where the sellers are. They know that, hey, you know what? I'm willing to double my position just like I did. What did I do? Okay. I entered at 340 on accident. Okay. Ideally, what I would have done in the situation is I would have looked to have got in at 342 initially, and then I would have doubled at 345. Or honestly, even more, because it was the major level. 342 would have just been 342 would have been, again, it wasn't the major level in this case. 345 was the next major level. So in situation of 342, what I'll do if I want to play it is I'll just take a quick dollar. I'm looking for a quick $1, $2 at levels like that. But ideally, smart trading is you want to wait till you get to this major level of 345. That was the smart money. As soon as you seen that it blasted through, got support on 340, yeah, you're waiting for it to push to 345 and take advantage of it. So, yeah. Okay, now flip your eyes back over to SPY. What happened? Got it earlier, we got our support on the algo, went to the VWAP, rejected the VWAP, got back below my day trading averages, moving averages here. And oh, another cool indicator that's going to be in the course is this trend indicator. Y'all see these black and green dots here? Can anybody see that?
Yeah, I do. Yes.
Okay. All right. So this is a really cool trend indicator. So pretty much the strategy with it is once you start seeing all three lines line up with color, or the first couple of lines, that signal, okay, black signifies heading down, green signifying we're going up. So just a really really cool trend indicator. So look back earlier in the day. So in this case, comes down here. You start getting a black here, black here, black here. Okay, so really, first one, you can play the first entry black dot, second entry black dot, very good confirmation. And then when you get 3 of them, yeah, that shows that you're in a pretty powerful downtrend line. So, and let's see, we got a green, our first green dot here, green, 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 and then black, 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 black. So anyway, cool little trend indicator there. Again, it'll be in the course. All right, mRNA is pushing back up to 345 liquidity. I'll tell you what, I'm gonna take I'll take a little bit of order. I'll take a little bit of order there on the second test of it. Again, wouldn't be surprised if it pushes through, but at this point, SPY is falling, so, or in the process of sitting at an algo. So I have no issue taking advantage of some short. All right, so got okay. So I'm just gonna go ahead and take a quick profit on it there at 343 out of the 345 sellers up to, which I think I only got 10 shares on that. Only feel 10 shares on that one, up to $118 on the day. Big baller. Y'all, I don't know if y'all noticed it, but anyway, my closed P&L right here, 118. If you're wondering where I'm getting that number from, yeah, more than likely mRNA is going to dump back to 342. Yeah. Oh no, it could. Honestly, it's probably gonna. It could. Yeah, it could easily dump back to 341. I'm not seeing buyers come back in until 341, so it better hold 343. If not, 341 will be here quick.
Just so you're aware, you have open orders, right?
What's that?
You currently have open orders, right?
No. I just I filled my orders. I don't. In case you didn't.
I think you do, because your open P&L is moving, right? I believe. Are you sure you don't have open orders or no?
Oh. Yeah.
Just double check, because I see your open P&L moving.
Oh, okay. So no, that's on another stock. I have no idea.
Oh, sorry.
No, I'm glad you told me that. I had no idea. I wasn't even looking at that. I don't even know. Let y'all look at the order. Oh, I apologize. I've been telling y'all about the order book and I ain't even had it pulled up for you. I'm sorry. Anyway, okay. So back on the order book there. I apologize. Yeah. Too bad I can't show both of them. Yeah.
Yeah, because I would imagine when you're teaching, there are so many things going on. You just don't want to, like, lose some.
No. I really do appreciate you telling. Now, hey, if I've been using my normal size and I didn't know I had a position open. Okay, so that's NVIDIA. So I had a short. We talked about it earlier. I had a short order on NVIDIA. I got five shares filled. 5 shares filled. I'm gonna go ahead and take it right now because I can't watch it. So yeah, that's what it was. Yeah, I had whenever NVIDIA ran up to one of those sellers, bounced up to one of those sellers at I think it was 322.50. I had five share short order sitting right there, and it got filled and got busy, and I had no idea that it filled. So that's where that order came from. So I'm going to take it because I don't want to have to worry about it while we're in the middle of education. And okay, now that I took those 5 shares off of NVIDIA, that brings me up to 149 for the day. Oh, now again, I'm not trying to make a laugh or joke out of making $100. Again, there was a time whenever I was learning to trade and all that. Hey, my if I could make
It was still short NVIDIA. I mean, mRNA right now.
Still short? No. We took that 345 short a while ago. No, NVIDIA now. Okay, I'm now looking back over at NVIDIA. Let me put y'all back on the order book. Okay, NVIDIA now is getting support candles on 345. So we got 1, 2. Ideally, I want to see one more support candle come down here to 345 and wick off of it. I get that. That's a confirmation for a push to the 350, 349, 350 liquidity. Okay. Y'all see that? Because again, that's the thing with my, when I send out a play, say, hey, I'm shorting at, I'm looking to short, and prime example right here, say, hey, I'm shorting at mRNA at 349, 350. Okay, well, if you're somebody who wants to play to the long side, you can play and say, okay, well, Brett's pretty confident it's going to go to 350. I'm going to play mRNA at the 345 support. Okay, I'm going to put my stop loss $1.50 below. I'm going to put my stop loss at 340, 350. An entry here at 345, 346, and I'm going to play to his play at 349, 350. Take my profit there, and then I'm going to short with Brett at that spot. So that's your other option to play. There's always, when I send out plays, there's always 2 plays on a play that I send out. You can play to my liquidity, and you can play with me at the rejection of the liquidity. And as we speak, mRNA is about to get to 349, 348. Okay. I will start.
I got out on time.
Oh, you stayed in at 345?
No, I mean, I got out at 146.
Oh, so
I only lost. Yeah, I only lost $15.
Okay, but why would you stay in at that? Again, it dumped all the way. Yeah, I mean, we got 2 tests of 345. One, of course, dumped all the way down to 349. The other one dumped back to 343 or in the 342s, 343, 342. I mean, that's a take profit there, man. I mean, again, this is the second retest. Now, on the first retest, you want to say, hey, I want at least $3 to $5. I understand that. On the second retest, be happy with $1 to $2. You can't, the more times, again, these candlesticks are like wrecking balls. They're hitting liquidity levels, okay? They're hitting a wall of liquidity, absorbing sellers, absorbing buyers, okay? The more they hit it, the more they absorb, the more likely they are to bust through it. So the more tests you get at a liquidity level, the less confidence, or the more confidence you get that it's going to absorb and push through that level. Now, all right, so we see with NVIDIA, I mean, this textbook right here. So pulls back to 345. And yeah, still looking for it to push. There was sellers sitting, a nice chunk of sellers at 348. They're knocking it down. Again, still looking for NVIDIA to push back to the 349, 350 sellers. All right. Oh, this is. All right. Perfect. All right. Remember I said I'm looking for the pullback retest of 345? You just got it. 345. That's your entry. Stop loss 340, 350. You're already at almost $2 gain right there. You want to take it right there, more power to you. Or if you want to play to the 349, 350 liquidity, there you go. So that's whenever people talk about consolidation, where it comes up, consolidates. Well, we know what's making it consolidate. It's consolidating back on this major level of liquidity that it pushed through. if you go back and you look at consolidations, oh, it comes back, consolidates, and then goes up. I mean, we know where I know where the consolidations are going to be. They're going to be right at these major levels of liquidity. Okay.
Are we slowing down now with the low volume? How are you going to play this here coming up to 350? If it's break to 350.
I'm sorry, I had like 5,000 alarms going off, so I couldn't hear nothing.
So which is the low volume right now, right? Is that 10 o'clock, 11 o'clock now? And it's coming up to 350 here. How are we going to play this?
Okay, so God, please stop. I don't even know which alert that was. Okay, all right. So actually, I had an order already sitting just below 349 sellers. I'm going to go ahead and just, which I didn't move it up in time. Anyway, I'm going to go ahead and just take a feel on that. Take a feel on that real quick, because again, that's the way I like to play it. If I see sellers right in front of the major level, okay, I'll start the orders here, and I'll play a $1 to $2 rejection. Again, mRNA is moves a lot more than your average stock. So again, normally it would be $1. Well, in mRNA's case, it just dropped, $1.50 off of that spot. Okay, so I'm adding orders back at 349.67, 349.75, 349.84, 349.94. Okay, all right. So you see the play, how we just got multiple plays out of mRNA. Okay, we got our pullback retested the major liquidity, 345. Okay, entry there, playing to the next major level. Well, which in this case you really need to be safe and take it at these 349 sellers. I mean, that right there. I mean, you got almost a $4 pump right there. So don't get greedy. Take half to at least 3/4 if you see sellers stepping in right in front of a major spot right there. So that's how you can, again, if you like, honestly, if I didn't like to short and I didn't, because I love the probabilities of shorting, I mean, it's just, there's a reason why I'm, there's a 90% winning percentage in the precision trade channel, because the majority of them are taking advantage of short major liquidity levels and taking advantage of profit. Now, if I just wanted more plays and I wanted, to potentially get a higher return, yeah, I would focus more on this right here. Just what happened with mRNA. Gets to a major level, comes back, retest it, entry there, stop loss, $1.50 below, playing to the next major level. That's a killer order book strategy. All right, pushing up to 350. Come on. Please don't tell me you're gonna. Man, again, that's why when you have sellers at 349 and 350, you got to be willing to start filling orders all in that range. Me, yeah, it's already dumped 349.45. It should come back and refill them, but that would have been an easy. Yeah, that was. Yeah, could have taken a quick $2 off of it there, and then put the orders, and then went back and put the orders right back just below 350 again to get them filled again. So, but again, mRNA is, like I said, you get a lot more volatility to it. And also, AO, as far as your what was your question a while ago as far as the volatility? I'm sorry, I got busy and totally forgot. Is AU still here?
Sorry, I don't remember asking any questions.
I'm sorry. I thought you said something about the time or the volume or volatility or something like that. I'm sorry.
Oh no, it was Sanchez. I think he was asking that since volume is drying up now, how would you make this place? I think that's what he was asking.
Okay. So anyway, so with that said, yes, volume is slowing down. We're getting to that time of the day. My alarm, my volume alarm went off there. So at this point, historically, yes, she's going to slow down a pretty good bit. So With that said, you have to play it pretty much on a, stock by stock basis. So, and also to the SPY. If the SPY is still moving decent, then hey, like it is right now, SPY still moving, SPY still dumping. So I'm not really too scared of the volume drying up, too quick on me right now. I'll gladly push it for another 30 minutes to an hour to take advantage of the volume that's continuing to come into the market. All right, NVIDIA is filling orders all up in the 349 area. I need to stop being greedy and pull it down a little bit so I can get in the action. Okay, usually don't like to pull them down that much, but mRNA could dump at any moment. So, so I'm not going to get greedy. All right, what's behind the, oh yeah, look at this, beautiful. mRNA, major level 350, there is no major levels. 355 is decent. Okay, just got my orders, my profit orders filled at 348. 348 on a rejection out of 349. Let me see, 349.50, got orders filled all the way up to 349.50, and we've got our dump all the way down to 347. Now I'm adding orders back, got orders all the way back at just below 349. If it punches up there again, I will gladly add some more orders. All right. Yeah, moving on up, guys. 359. Yeah, like the slow and steady. The slow, 5 shares at a time, baby. It's like eating an elephant. Eating an elephant, 5 shares at a time. All right, come on, NVIDIA, push back up. I mean, not NVIDIA, mRNA, push back up there.
So for NVIDIA, do you suggest buying since it's at buyer's liquidity? Okay,
good question. Who's that? Sanchez, is that you?
Yes.
Hey, good to hear from you again. Okay, so no, I'm not buying at 315, man. Now if you'd have got there right, if you'd got in there right at that liquidity at where was it at? Oh no, I didn't even zoom out here. Okay, all right. So prime example here, I will play a short scalp bounce. If I see it push through liquidity, you see 315. I'm on NVIDIA over here all the way to the right. Okay. Now I will gladly play a little bounce. When I see it blast through a major liquidity, okay, no support candles on it all. It blasted through 315, all the 315 buyers, and then I see buyers coming right in $1 below it. I will jump in right before those buyers, and I will play, close to around $1 bounce. I'll look for, somewhere around $1 bounce or a push back up to retest the 315 liquidity. So, but again, the market is falling. SPY is falling. If you're gonna do something like that, you have to be quick. You have to be quick to take your profit on your bounces if you're going to try to jump in front of the market. That's a falling market. But again, it's not the easy money. It can be you can make money with it if you play quick, but really you're looking for SPY to find its ground, find a good support spot, and then you start looking for your longs on NVIDIA or your Roblox or whatever it is. That's, now with that said, volume is really starting to dry up here. So, we're not too worried. Now if you want to play the middle of the day, hey, play the middle of the day, but you better be waiting for it to hit liquidity levels, and you better be taking your, $1 to $2 profit. Yeah, you don't want to get greedy in the middle of the day. That's why so many, like Ayo talked about earlier, about giving your profit back, giving profits back. Oh, come on, mRNA. Look at that. Dump all the way back to 340, 345. Man. Yeah, wish I'd have filled more orders now. Okay, so I just got an alert for Baba. Let me look at Baba. Tell you guys, when the market really dumps and BABA gets hammered, oh man, tell you, it's going to be such a long-term buy the dip. It ain't going to be funny. All right, so BABA, just got my alert on BABA approaching a major liquidity. 331 and 330. Yeah, a lot of buyers at 333 to 331 on BABA. Can y'all see that? Yep. You zoom out here on the $5 increments. You want to know where to buy the dip on a stop for the day?
Switch your screens. Can you switch the screen back to
Oh.
the liquidity?
Oh, I'm sorry. I thought I was. Do you see it now? Okay. So I'm on the $5 increments on BABA. And as you can see, when I see a just massive level of liquidity like this, yeah, that's when you want to buy the dip. That's the dip. Now, with that said, if SPY still keeps falling through the floor, you know, people are going to pull their orders and all that. But for day trading purposes, no, I will gladly, if I see a level like that, give it to me. All right, so NVIDIA pushing back up to 3. Sellers just came in at 315. They want to knock it back down just below 315. Remember, Sanchez, what I said? If it comes down, I'm going to look for blast through that liquidity. I'm going to look for it to, if I want to play this play, I'll see where the buyers are coming in, and then I want to play back up to the liquidity that it blasted through. Because more times than not, it's going to come back and retest it. And that's exactly what it's doing right now. And honestly, it's probably very good chance I'll jump into a quick little short there. Just for laughs and giggles with you, Sanchez. Let's see. Okay, SPY is trying to make a recovery. All the way down to 358. It's getting hammered. It is getting hammered. Yeah. This is ugly. Ugly going into to the end of the week. But I'm sure your computers will try to buy it right back up next week. So, all right. Man, I am tempted to take all my UVXY VIX off of the table because, God, I got 50% of max profit on it. So I'm tempted to just go ahead and take it off of the board and then look for them to pump the market back up and then re-short it. Yeah, I might just go. As a matter of fact, I need to send a message out to the text message alerts and tell them not a bad idea to take some profits today. If you got any more, hopefully people got more short profits. I only said 315 or 370, great place to short SPY. I don't know how many times.
So what's the take profit of NVIDIA?
So I wouldn't even pay attention to it anymore. Okay, so NVIDIA, okay, so it's pumped back up to the 3. Yeah, take it anywhere in the 314s, man. So the sellers were sitting at 315 to 315.50. So yeah, SPY is trying to pump. So yeah, don't get greedy. Take it 315.50, 315.20.
Like too short, right?
Yeah, that would have been too short. But again, you know, that's not it's not a golden play by any chance. I mean, that's just example, just wanting to play. Just, man, I just really MRA punch back up to, oh man, I didn't add my orders back. God. Okay. Yeah, I'm such a goofball. Didn't add my orders back to 350. mRNA punched right back up to 350 and is dumping all the way down to 346.
It's insane when a stock becomes predictable, like MLRA, it is the liquidity level, it dumps, it is again, dumps again. This is beautiful.
Oh, it is, man. And again, we have a lot of confidence here because, you know, somebody that's just using lagging indicators, they have no idea that 350 is more than likely the top for the day. I mean, that's where the monster level for the day is 350. So, you know, we're shorting confidently at that level. You know, people that are long are like, you know, they're starting to freak out. They're like, oh, what, you know, it crossed my, you know, 10 simple moving average. You know, what do I do now? So yeah. I am very glad to not have to rely solely on lagging moving averages. It is so freeing not to have to do that, to know where the buyers and sellers are. Man, it's as close as you can get to being able to cheat the market. All right, Sanchez. All right, so it's finally gotten up to the 315.50 sellers, and we have some more coming in at 316. So again, you're just dying to have a play, which you got to realize when there's a lot of plays to be made in the market, you know, go with the ones that are easy money. Okay, but I got in there with 315.50. I got 5. I just did a 5-share, little 5-share order. I'll take it on a dump. SPY continuing to pump. It wants the 359. I'll go again. And NVIDIA is going to continue to pump with it. Pushing up to the 316 liquidity. Sellers sitting there. That's a nice ad, Sanchez, if you're just wanting to, just dying for NVIDIA, which there's a lot. That's my goal too. I'm always trying to find the easiest money. I mean, with the order book, I can make money pretty much on any stock multiple times a day. But it's one of those, ideally you want the easiest money. I don't want to have to work hard for, you know, my money. I want to, you know, take something like NVIDIA 350. I mean, that's just shorting at 350. I mean, that's just easy money. All right, Baba came down into the just above the 331 buyers. They've popped it up to 332. So nice little dollar bounce off that liquidity for Baba. Okay, NVIDIA is starting to reject out of the 3. Needs to fill a little bit more liquidity there. Come on, just give it a quick pop. Okay, NVIDIA looks like it wants to pull back to the 315 buyers. Tell you what, I'm gonna take my little $5 shares off, right? If it dumps to 315. All right, come on. All right, Sanchez, I'm trying to show you how to make money even on the tougher ones here, man. All right, more sellers coming in, 315.70. They want to push it down. They want to push it back to 315. There it goes. All right, they pushed it back. Taking my big 5 shares off there for a $2. $2, baby. I just paid for a coffee. All right, so NVIDIA pushed down to the buyers at 315, pushing back up. Going to try to push back up to the 316 sellers. Yeah, this is tougher money here. All right, so back to mRNA. So we got the majority of orders filled at 350. People that wanted to be filled at 350 got filled. The majority of them were sellers, knocked it all the way back down to 345. Buyers, computers, trying to push it right back up to 350. All right, let's get off Bob. Does anybody else got a stock that they want to recommend for me to replace with Baba? Baba's not a big mover here. Any other recommendations?
So yeah, another point. Also note that, I mean, personally, I don't like playing the $36 stop because they just don't move enough to warranty my time, though. Because the APL is so small. I don't.
yeah, I know. I'm the. But again, I understand. Certain people have certain certain account sizes, so they have to focus. They have to focus more on smaller stocks and stuff like that. But at the same time, if you can still easily play our strategy with large caps. Mm-hmm. Again, smaller share sizes. Again, I mean, y'all have been seeing me use five share orders here. I mean, I'm not. $161 on the day. So again, I don't. Last thing I want to do is come in here and be throwing around monster share size and trying to show off. Look how much money you can make. No, the other day it's let's focus on the strategy, learn, understand, and then if we can make money while we're learning the strategy, that's just Because take for instance, I mean it's like going to college. I mean you're getting a trading college education here. All right, Sanchez, push back up to 316. I got an order filled. 5 big shares there, just under 3. Oh, I got 2. I got 2 orders filled. 10 up to 10 shares of 316 liquidity. Again, this is not all right, absorbed. Okay, everybody's been absorbed with 316. So SPY's trying to pump. NVIDIA wants to pump with it. Sellers popping right back in the book at 316.60. Knocking it right back down. Again, these are not again, I'm doing more playing this back and forth NVIDIA on these little baby stuff just to help you to see the order book and the strategy and how you can take advantage of it if you want to take advantage. So again, you see the sellers jumped right back in there at 1660. They're knocking it down. Knocking it right back down. Again, this market wants to, people are wanting to take profit. Computers are wanting to take profit. Again, we're at the middle of the day here. Volume, this is not the time to be. Again, if it's a high flyer like an mRNA or Tesla or something that's moving with a lot of movement, that's fine. You want to play it in the middle of the day, but like NVIDIA right now, prime example. I mean, there's no point in fighting for 50 cents right now. Now, if it wants, if it can push to a major level, that's fine. Take advantage of it. Have your alert set. But right now, there is no major level on mRNA or NVIDIA other than 310 to 312. So I don't play with baby liquidity. I want the big stuff. Yep, I want the big stuff. Because the bigger it is, the faster it's going to move. The faster it moves, the faster I make money. Yeah. NVIDIA right now is like watching paint dry. Boring. All right, let's see here. Let's go back to Roblox. All right, what's happening on Roblox? Okay, Roblox. Man, I wish I'd have been on Roblox instead of Bob. See, Roblox had a huge level of buyers at 320, and sure enough, it bounces right out of them. So you see that? Get support candles. That's a nice entry. Yep, take half here at, let's just say hypothetically, I was in at 320 at the 320 liquidity. I'm taking half here at 322 or 3/4 of the position, and I'll hold a quarter. I'll hold a quarter, maybe a little bit more for a push to the VWAP if SPY can hold. SPY starts dumping, then take it because it's going back to the 120 liquidity. All right, NVIDIA. All right, sellers trying to step in at 317. I'm gonna add Sanchez. If, like I said, trying to get these little very difficult profits. Adding at the 317, shorting in the 317 rather, shorten it back to 316. I'm sure you can see it on my screen there, but 317, just under 318 is where you got to load your an actual sizable level of sellers at 318, which these ones at 317 are good. Okay. All right. So pushed it back 316, take profit on that little, baby, little $1 baby dump there. This case, you want to play some more babies. Well, let it push up to just below 318 liquidity and let it dump, around $1 and take it again. All right, so SPY regained the 359.30 algo, rejecting on the 349.50 one there. So it's a tough spot. Tough spot for SPY. Low volume. So don't be surprised to see it hang around these two algos for a while. Here, let me flip my screen here so y'all can see what I'm talking about with their algos. All right, SPY right here, 2 algos, double algo. See, we bounced off of it earlier, finally came back down, rejected on it. And sure enough, pushed right back to it. Now it's bouncing between the 2 algos. If we can get back below them with rejection candles into the 358s, look for more downside. But again, low volume. Don't be surprised to see the computers come in and try to rescue SPY later in the day, just like they did on Wednesday. Remember Wednesday, we were expecting that to happen. Oh, another thing I've been forgetting to I've forgotten. All right, so mRNA, look at, okay. 350, dumping all the way back down to the 339 to 340 buyers. So somebody just wants, if you're just wanting to, you know, which is in my book, it's way riskier. The easy money was 350. But if you want to just play a, you know, get a nice little quick $2 off of mRNA, then 338 to 339 is where you want to jump in there real quick. Push down to 339.20. See if we can get about a $2 pop once it gets feel some more liquidity in the 338, 339 range. Oh, let me flip y'all back over to the order book so you see what I'm saying. Okay, right here, liquidity, buyers, sellers, rejection out 350, buyers stepping back in at 338 to 339. Again, if you want to play the riskier, yep, you can jump right in here, play for a bounce back to 342, 343. All right, feeling liquidity at 338 as we speak. Looking for the pop. They better hold, because if not, she's going to dump quick. All right, orders, all the buyers have been absorbed at 338. It's not a good sign. Didn't get that quick pop off of them. Pushing to the VWAP. Yep, when you see all the orders disappear, that's why I do not like to catch falling knives. It shows that it can hold them, or it's a monster level of buyers there. I don't mind, but this right here, yeah. No, I am not trying to catch knives and buy dips in these type of situations. Now, granted, I mean, if I really wanted to get in, hey, I'd orders here at 338 and really 337, because that's where the VWAP and the liquidity are so close together that you really got to be willing to add in the 337, 338 area as well. And then really, mRNA, you got to be willing to, you got to let this monster move. Something like an mRNA, you got to be willing to have a $2.50 stop on something like this. Yeah, it's just risky business. Yeah, it's just not worth it in my book. Yeah, look how easy this money was up here at 350. Easy money rejection. Easy money rejection. Trying to catch a knife? Risky business. All right, so actually ends up pushing all the way down to the 335 buyers. It's going to, yeah, more than likely it's going to push right back up to 339, 340 sellers. Okay, all right, Sanchez. Yep, so we see over here on NVIDIA, flipping back over, NVIDIA sellers kept coming. Yeah, when I see sellers keep stepping in the book right here after this major level of 316, it's, you know, just really is, yeah, very, it's a good confirmation that they want to knock it down even further. So all the way back to the 315s. Okay. So let me see. Also too, someone had, I'm trying to remember who it was. I think it was G7 we had talked about options. All right. Yeah, tell y'all what. I'm going to show y'all. Does anybody want to see what South America looks like today? Is anybody even still alive with me here?
Yeah, I do.
Ah, okay. Well, I'll tell you what. Pin my screen, so it'll give you a full screen, and then I'm going to show you what South America is looking like today. Oh, let me get off of my. All right. This is
Oh, wow.
my kids' dirty balcony with the toys. So yeah, that's the Andes Mountains. So yeah, 10,000 feet up, living in the clouds. But yeah, it's a wonderful city.
Yeah, it's a nice scenery. It looks nice.
Yeah, really enjoy it. It's a beautiful place to live and raise a family. All right, let me share my screen back. All righty. Oh, options. Okay, I think it was G7 that we talked about options. So what I would like to do while the market is just chopping. Ooh, look at that big dump on mRNA. See, that's why y'all very rarely see me sending out buy the dip plays unless SPY is holding and yeah, and it's a major level. Risky business. Not worth it. All right, very nice. Oh man, I just realized I didn't. Oh God, I mean, I feel bad. I should have sent out some of those mRNA rejections at 350. At least one of them to the server. Jeez, gonna have zero winners on the day. Which if you came to the live stream, you found winners, but oh well. Again, this is an education day, so foregoing the profits. Okay, so mRNA is still dumping. Yeah, mRNA is gonna make its way back to 300, 310, and eventually it's 200. It's just a matter of time. Just a matter of days, rather. All right, so I'm gonna flip over to Power E-Trade. This is a personal account. I got a professional account and a personal account with each E-Trade. And I like to send the screenshot of the option plays out of it because I just really like how it formats it. It's nice and clear. But I do want to focus in for a few minutes on options. I think it was G7 had some questions about options. Is she here by chance?
Yes, hi there. How are
Hey, good. Hey, so what's your first name?
you? Misha.
Misha. Okay, all right. That's way better than calling you G7. All right, nice to meet you.
Nice
Misha.
to meet you.
Yeah. Okay. All right. So I'm gonna if you don't mind, I'm gonna flip on my Power E-Trade.
Okay.
Again, the
That'd be great.
Markets on
I
deck.
was going to ask you, I kind of missed the beginning session. Are you going to drop the recording today?
Yeah. I will post the recording. We, thankfully, who was it? I think it was Sanchez. I'm not mistaken, it was Sanchez or somebody else that saved me from forgetting totally. I was
good.
I was like 15 minutes in and thankfully he reminded me because I would have hated myself if I would have forgot to
good.
record it.
Because I saw in the Discord a few people missed it, so they were asking. You probably didn't see it yet.
No. Like I said, I've been trying to be laser focused, laser focused this morning. So yeah.
Well, I'll definitely be reviewing this part for sure because I don't understand the credit spreads. I don't know why I don't get it.
All right. Well, I'll tell you what. I'm about to try to make your life a little bit easier because I got about 20 or so minutes left, and then I got to take care of some. I got to take care of some things with the congregation. So yeah. So y'all got me for 20 more minutes here.
Thank you.
Also, too, if anybody needs to hear a good Bible talk or sermon, I got one next Wednesday night, and then also next Sunday. So just hit me with a direct message if you Yeah,
Oh,
if
cool.
anybody's interested, let me see, Wednesday will be, let me see, we're in the Bible reading will be actually, the Bible reading on Sisera, which I don't know if a lot of people know that, but Sisera during that time back in Bible times, he was kind of like an Osama bin Laden type character. He was like a really bad dude. So anyway, so that'll be a Bible reading on, have a small little 10-minute talk on him, and then Sunday will be the public talk for the congregation. That'll be on God's kingdom. What is God's kingdom? Because Jesus told us to pray for it, told us to look for it to come to the earth, all that good stuff. So what does all that mean? And to also put it first in our lives. So anyway, all those questions will be answered in that Bible talk. So anyway, all right, yeah, and it's on Zoom. It's on I don't expect anybody to come in person. It's all the congregations were worldwide majority are still on Zoom. So yeah, it makes it really, really easy to listen to Bible talks. All right. So with that said, Power E-Trade. Power E-Trade. So Misha, first of all, is making sure you set up your columns correctly. So first of all I want is a bid, ask, delta, theta, implied volatility, that kind of, I don't even need volume. I don't even know why I've got that on there. And of course you can change your columns. It's been so long since I've changed them. I messed with that in a while. Let me get this out of the way. Also with your, just give you a quick little, okay, you make your watch list here, multiple watch lists, and you can, if you hit the symbol here, you can put them in alphabetical order. So that's really nice. So I can't remember where I edit the column. It's somewhere around here in the settings. I just can't remember exactly where I spent so long since I edited them. I forgot. But anyway, so you can edit these columns to get whatever columns you want, Misha. So let's just use an example. NVIDIA. Now let's say you expect, well, there you go, Sanchez. NVIDIA is all the way down to 314. So getting shortened in that 316, 317 wasn't a bad midday low volume play, eh? Okay, so all right. Now let's just say you want to play NVIDIA to the downside. Now normally you would buy a what?
A put.
Okay, exactly. Okay, so your put's right here. This is the put side. Now, if you want to do a spread, you want to take advantage of a spread, and ideally a credit spread, so you'll be getting a credit, so that means implied volatility will be working for you. That's always my preference. I love credit spreads because I want implied volatility to work for me. Yeah, I'll give up a little bit of profit to have more cushion and have implied volatility work for me. Because that's where the majority of the people that are making money with options long-term, people that have been doing it for long periods of time, they're selling options, credit spreads and stuff like that. They're not buying options. I mean, it's buying options. I mean, you literally, the odds are stacked against you so heavily. That's why if you're going to play options, it needs to be short-term, like using our strategy that we use to be able to get in there, get out really quick, yeah, that's the only way I recommend playing naked options, because it can get you real quick. So let's see here. So put, you can buy a put that takes advantage of making the market go down. Now the other side is a call credit spread or a bear call spread. It's a bearish play. So in this event, what we would want to do, let's just say hypothetically, okay, we're going to sell the 317 and we're going to buy the 320 behind it. You see that?
Mm-hmm.
Okay.
Okay,
now,
this is where I get confused. If you don't mind me interrupting you.
No, go ahead. This is for you.
So you're selling the 317 put.
Mm-hmm.
Is that what that's doing?
No. We're on the call side. Because-
Oh, okay, so we're
So,
selling a
yeah.
317 call, which makes sense to me because if it's going down, then
Exactly.
that's benefiting you. But I don't
Exactly.
understand why we're buying what was the buy? Was that a 320 call
Yeah.
as well? Or is that a 320 put?
So we were buying, because again, this is in essence a hedge. We're hedging ourselves, okay, with the 320. Or I'll tell you what, I'm going to do the 320. Oh, this is not unfortunately, whenever I have my professional account on here, it doesn't give me live. It won't give me live a lot of times. So anyway, so that's why it's giving me that's why the numbers are a little different up here, because the stock has already fell. So technically, let's just say we're going to do, right now the stock is at 315. We're going to do an at the money. So we're going to do 315. We're going to sell the 315. We're going to buy the 320. Okay. Now, if you just sell the 315, okay, that's just like, that would be the opposite, kind of like the opposite of buying the put. Okay. Both of them are directional options. Okay. So you have no hedge. You're expecting this up, expecting the price to for sure go down. All right. So, but when you buy, the problem is when you sell options, they're extremely expensive. Extremely expensive. It's going to take to sell options. You have to have a lot. You have to have a very big account, because what your broker is going to do, your broker is going to take out enough margin to cover 100 shares of NVIDIA.
Okay.
All right. So in this case, yeah, that's a lot of money. A lot of money. So for 300, so for a $300 stock, yeah, they're gonna take out 100 shares worth. So again, it makes it very expensive. It makes it very expensive just to sell naked options. Okay.
Right.
Whereas if I come in here and I buy one behind it, now what I've done is I've reduced my margin big time that it's going to take from my margin. So if you look in this snapshot right here, all right, so we go up here, you see on here, so it shows that I'm selling here and I'm buying the 320. Now, if you go to the Snapshot Analysts, this is going to give you your figures. Okay, so this helps you to see that my max profit on this contract is $146. So I can make $146 per contract. Okay. And this is expiring Friday, of course. My max loss is 354. Okay. So not really the best, risk to reward, but again, this is just for example purposes here. This is, I ideally when I'm looking for spreads, I'm looking for right around a 1-to-1. That's what I want on spreads, because normally on a spread, what I'll do is I'll back it up. More so, what I'll do is I say, okay, I really think NVIDIA is going to stay down this week, so I'm going to move all the way back to 320. I'll sell the 320 and I'll buy the 325. That way, in essence, what I'm doing is I'm guaranteed, as long as NVIDIA stays below 320, I make all of the profit from the spread. So, what we're going to do is we're going to stick with the 315 to 320 for educational purposes. So, in essence, what's happened here is our break even on this is 316. So if it ends the week at 316.46, we break even. We don't win. We don't lose anything. Okay. But at the same time, if it stays below 315 on the week, we make $146 per contract. So,
Okay.
all right, that's the idea behind a bear call spread. The easiest way to keep it in your mind is, remember, bear call spreads for shorting the market or puts, for a put, and then a bullish put spread if you think the market is going to hold or push up. Okay. So bear call spread is if you think that the stock is going to stay around where it is or it's going to go down, and then bullish put spreads for if you think it's going to stay around where it is or go up. Because that's the cool thing about credit spreads, or bear call spreads or bullish put spreads. If the market moves sideways, we make all of our money. If the market goes in the direction that we want, even a little bit or a lot, we make all of our money. Even if it comes down to where we start our position at, we still make all our money. So really the only way you lose with a spread like this, if you do no updating with it or whatsoever, is if you know, it pushes again, the max for this one, okay, 315 is where we're starting. So really it would have to push to around almost 317 before we start losing on the contract. Okay.
Oh,
So
okay.
now the thing is, you know, a lot of people, oh, that, you're not making a lot of money. You know, it's like, oh, that's not a lot of money. Well, the thing is, what you do is, let's just say you're buying naked, you want to buy puts, some naked puts. You want to buy these 37 delta, or say you're going a little bit out of money. You want to buy these 16 delta puts. So of course, you know, or in this case, it's, well, 19 now, 1920. So you know that for every dollar it moves, the delta moves around about that amount, right? You understand that?
I usually do 50 or higher.
Okay, all right, so good. So you understand delta. You know that for every dollar the stock moves, the delta is going to tell you how much you're going to make or lose per dollar. Well,
Right.
the thing with spreads is you can get the same delta. You just have to do the math. So in this case, where were we at? So we're selling the 315, and then we're buying the 320. Now, what you do is you just subtract these two deltas. In this case, it's going to bring you down to a 40, close to a 45 delta. Okay. So that means for every dollar the stock goes down, you're going to make $45. Okay. Because that's where a lot of people, they complain like, oh, I can make more money on naked options. It's like, no, you can make the same money with a spread. You just have to make sure that your delta, when you subtract the deltas, that they are the equivalent to however many naked options you do about. Because with that naked option, you get no protection. It has to go the direction it needs to go, and it needs to go there quick. Okay, you have no protection. So in my book, I feel a lot better. Instead of buying a 50 delta put, I would much rather have a 50 delta bear call spread. Okay, now you may have to buy multiple contracts to get your total up to 50. So you may have to buy like 2, maybe even 3 to get your total up to, your total delta up to negative 50. Okay, but at the same time, you got protection. You have no protection. IV is not working in your favor with this put. On this credit spread over here, it is. I'm decaying, THETA is decaying money into my account every day. The stock couldn't move one more penny, and I make all my money because THETA decayed all. Whereas with your put, it doesn't move a penny. You lose every penny of the contract. So
Right.
So the simple way to understand it is, like I said, just understand the deltas. Understand that you have to subtract the delta to get your total delta, which, when you go to your account, you should have, one of the things that you definitely want to have is set up your account to where on your account page, set it to where it shows you the total delta for your contracts or your spreads. So you quickly see what your total delta is after you buy contracts. But other than that, just understand that, okay, I'm bullish put spread. So I'm playing, just forget call or put, just kind of erase that from your memory for a period of time and just realize that it's a bullish put spread if I think it's going to stay the same or go up, or it's a bear call spread if I think it's going to stay the same or go down. Okay. So that's the general idea. And the easiest way, another easy way to visually is, I know that when I do a bear call spread, I'm always going to buy behind it. Okay. So I'm going to sell and then I'm going to buy behind it on my bear call spread. On the put side, my bullish put spread, I'm going to sell my put and then I'm going to buy a put behind it.
Okay. I just am wondering why buy the 320. That's, I guess, where I'm confused. So if you're selling the 315, because I get that, because you believe it's going to go up, but why would you buy at 320? Because that's so out of the money. Okay. Well, the thing is, you're only buying this to hedge yourself and to reduce the cost of the overall. Because again, if you just sell this, you're going to be paying, probably, what is that, 5
$5 to $10 or $10,000 in margin, $5 to $10,000 in margin is going to take away from you for one contract. Whereas when I buy behind it, the market, your broker sees that you're hedging, so they will allow you to buy way more of them. Okay, so because so right here, if I sell this, I'm making $50. I'm making $50 for every dollar it moves because the delta's 0.49 or 0.50. Whereas if I buy behind it, now the market sees that I'm hedging. Okay, so what they're going to do is they're going to, so for this contract, prime example, they only take out, which they are only going to pull away from your margin, your max loss. So for every contract I buy, they will only pull away $350 of margin to set aside. Okay, so but at the same time, I have a now in this case it's a 40 delta. Okay, so this 40 delta is costing me $350 to have a 40 delta credit, to have a credit spread. So again, theta's time decay is working in my favor. Okay, and I only have to spend $350 to get that time decay work in my favor. It's really, it really is.
And what was the price where you started losing? Where you would go in the negative?
Okay.
So you got in around 315 and you're bullish.
Yeah. So
in this case, would have to go to
in this case, we're bearish. We're bearish on NVIDIA right now. We feel it's going to go down. That's why we're on our bear call spread. Okay.
Oh, no wonder.
Yeah. All right. No, that's like I said, you keep.
I'm really smarter than this. That's what's so crazy about it.
Well, see, the thing is, you keep thinking call. When you hear the word call, you think, oh, the stock's going to go up.
Right.
You think the word put. You think the word put. Oh, it's going to go down. Well, that's why again, it's a bear call. Bear meaning, of course, a bear market, things are going down. In a bull market, things are going up. So that's why we use bear call spread for the name of it. Because again, it is the equivalent to a put, but time decay is working in our favor. Okay.
Okay.
All right. So that's the general idea behind it.
Is this something you? Oh, go ahead.
No, go ahead.
I was going to say, is this something you could use if you believe a stock is trading in a certain range? So, like for example, so if I think NVIDIA, for example, is going to next week trade between 309 and where it is now, maybe even 320. Would I do this type of trade?
Okay, so you think, so you think NVIDIA's, because again, where you sell the contract, that's your line in the sand. That's where you're saying, okay, I don't think it's going to come past this point. That's where you're saying, okay, so
that would be maybe 320.
Okay,
I think it might go 309 to 320.
Okay, all right.
I think it'll hit 309 again.
All right, so if you don't think, well, again, this week is over. I mean, today is over. So
right.
Let's go to next week so we can actually get some decent figures here. Okay, let's just say today. Today, you're saying that next Friday, of course, you can sell it at any time in between. Between now and next Friday at expiration, you do not think mRNA is going to go, or NVIDIA is going to go above what, 350 or 320? I'm sorry.
Correct.
Okay, so this is your line in the sand. Bam, you're selling at 320. I don't think it's going to go higher than that. Now, what I'm going to do is I'm going to buy behind it. Okay, because what this is going to do, this is going to hedge me. All right, and it's going to give me, I'll talk about it in a second, and it's going to give you more flexibility. All right, so now let's look at our analyze. All right, so this is what our analyst shows us. So our max profit on this contract is $195, just under $200 per contract. So every contract we buy, we are guaranteed $100 or almost $200 as long as it stays below 320 next week.
Okay.
You get that? So Friday next, let's just say fast forward, Friday comes along, NVIDIA is 315. Guess what? We get $200 per contract. NVIDIA's 319. We get $200 per contract. NVIDIA's $319.99. We get $200 per contract. NVIDIA's 300. We still get $200 per contract. Okay.
Oh, so that's where I was confused, because when you add the part at the bottom, the buy, when you say I'm selling and then I'm buying at 325 level, that's where I get confused, because in my mind, I'm thinking, okay, well, that means if it goes below that, you're starting to lose money, but you're saying that's not the case. It's just a hedge. And
It's a
your
hedge.
wall is the 320.
That's it. That's it. Yeah, you're lying in the, you're lying in the
Okay.
sand where you say, hey,
Mhm.
I don't think it's going to go below this spot on a bear call spread. I think this is the top 320. It's not going to go now. Now, again, during the week, let's just say by the time, again, theta decay is working in this contract. So let's just say next Wednesday or Thursday comes along and it's at 315. It hasn't moved a penny. Well, you've already decayed half of the, I'd say probably around 40 to 50% of the contract in profit. I mean, you can take it right then. You don't have to wait to the end of the week to take half of the profit out of the max profit. In this case, it'd be $100 per contract.
Okay.
Whereas if you'd have bought a put at 315 and next Wednesday it's at 315, you've lost around 50% of the profit, if not more, 50 to 60% of the profit in that contract. Okay.
Got it. Okay.
So just
This is
remember,
great. I like this.
yeah. So just remember wherever you sell the contract, that's your line in the sand. So again, or say here it's at 325. Okay, you want to sell 325. Okay, my line in the sand, I don't think she's going to go above 325. Okay, and then I'm going to come behind it and I'm going to buy the 330. So, and again, if you go to your snapshot, now your break even is 326. That means as long as it stays below 326, you're break even. You don't win or lose. If it stays below 325, you make, in this case, $150 per contract.
Okay.
So you understand? So that's why, again, bear call spreads, these credit spreads. I mean, they give you this is what smart.
And the probability was higher on the one you just did too.
Yeah. Well, I mean, the closer
not that matters sometimes.
Yeah,
probably.
exactly. Well, yeah, because there's less likely. Take, for instance, if I go to 330, and then I buy the 335. The further I get away, the more my probabilities are going to go up. So in this case, it's at 82% probability that the market says that I'm going to win on this one. Again, this is max profit of $115 per contract. Every contract I buy, as long as it stays below 130, I make $115 per contract. And again, my margin that it requires from me is my max loss. Max loss 385. So that's for every contract I buy, my broker will take $385. So, but the cool thing, what I love about spreads is it gives me, this is next level. I don't want to try to blow your brain, but what's cool about it is, take for instance, I do 320, I sell the 320, excuse me, buy the 325. Now, in normal situation, of course, if you bought the put, and it goes against you, you're done. You're done for. Whereas, let's just say hypothetically, on Monday or Tuesday, I buy this today, Monday or Tuesday, for some reason, NVIDIA pops all the way to 330. Okay, if you bought a put, you're done pretty much. It's because with a put, it's like, if you buy the 315, because the 315, prime example, if the 315 put, if you buy the put, okay, so this is almost a $10. So that means next Friday, guess where NVIDIA has to be at expiration for me to make money on this contract or break even on this contract? You know how to calculate it? You know how to calculate it real quick with the delta?
No.
Or the contract? Okay.
No.
So, all right. So it's at $9 right now. So what I do is I subtract $9 or $10. In this case, I'll just say $10, rounded up. $10 from 305 or from 315, which brings me down to 305. That means come next Friday, if NVIDIA is not at 305 or lower, I lose all of my money. That's the quick math you can always do with your contract that you buy. So you take your strike and you subtract your contract price from it. So in this case, $10 subtracted from 315 is 305. Now let's see. Now if we do our snapshot analysts, we'll do the math. It'll do the math for us. See if we were right. Now, what did I say? If next Friday, NVIDIA is not at 305 or lower, we lose money. Is that what I said? Okay, all right.
Yeah.
Now, look at what it says here. What's our break even?
305.
There you go.
We're
Nice. So that's how you can quickly do the math with options using your contract price and the strike price. So,
Okay.
all right. So that's why, again,
Interesting. It says it doesn't think it would be at 305 though. The probability is 0.
let me see. Probability at 305. Yeah. No, it's it says,
down there.
it says there's a 28% chance as of right now that it's going to be at 30, that you'll get your break even at 305. So, which, I mean, you got to realize how hard is it to, I mean, that's pretty risky to say that for sure NVIDIA is going to be at 305 next week. I mean, yeah, I'm surprised it's even at 30%, because more than I can guarantee you, NVIDIA ain't going to end the week at 305 next week. So it ain't going to end the week at 305. So with that said, that's how you calculate your break even really quick without having to look at a snapshot analyst, all that kind of stuff. Now, next Friday, again, you have to be at 305 to break even on this play. On this put that you bought, this 315 put. All right. So you bought a put 315. Well, let's just say we bought a bear call spread at that same spot. NVIDIA's at 315, but instead we're going to buy the bear call spread. Now, who do you think is more likely, who has much greater probabilities of making money next week? The guy that bought the 315 put, or the guy that's doing the bear call spread at 315?
The bear call spread.
Oh yeah, very much so.
Yeah.
Very much so. So look at this. As long as it's below 315, we make $237 per contract. Okay. If it's at 315, if it's at 315, if it's at 315 or 314.99, this guy that bought the put, he loses all $1,000. He loses $1,000 on his 315 put. We, on the other hand, make $237 per contract that we bought.
Oh, okay.
See the difference?
No, this is great. This is much better than. Now, is this good for like the day trading scalping that I do? Like how I like to get in and out. Sometimes I do load up kind of heavy on the contracts because I'm fine with maybe 20 cents. And then that's a pretty good profit on based on how many contracts I have.
Oh, yeah.
However, I do want to minimize my risk because I feel like my trading has gotten a lot better. But as we saw, as I shared with you last week, my risk management needs to tighten up. And this seems like this would really help me with the risk management.
Yes, because it's going to give you more room to be right. Okay. It's going to give you more room to be right. And you can get the same delta as your naked option. You just have to, like I said, buy the equivalent amount of contracts to get that delta that you want. So but here's an example of SPY. I know you like to trade SPY. So.
I can't believe SPY is this high today. It's crazy. And I won't take up this training session. We'll chat about it on Discord. But of course, I'm like, oh my gosh, I did not have to take that loss on Wednesday.
Yeah.
That was terrible.
Well, the thing is, how long were your contracts? I'm
expecting till Monday.
Oh, they would expire until Monday. Oh,
yeah.
Man. Well, I kept saying,
and not only would I have saved my money, I would have made a ton of money.
Well, see that's the thing. I mean, I'm assuming that you're getting a lot of day expiration contracts. I had no idea that you pushed them all the way out to Monday, because I would have told you that honestly. Well, at the same time, you're buying naked, so it's just decaying. Whereas if you'd had credit spreads, or bear call spreads, say in this case, you would have bought, for example, like 470, or sold the 470 and then bought behind it. Oh my goodness! If you'd have told me that you loaded up on that, I'd have been like, hey, let that baby ride. Because that,
Right.
because that 470 algo at this point, I got more faith in my algo than I do this
Yeah.
market pumping past 470. But
Totally.
yeah. So yeah, I have no idea. I apologize. I should have asked you when the expiration expiration day. I just assumed that you were day trading with SPY, so you were using the next expiration date that day or the next day's expiration as you.
No, I usually what I do is if it's Monday, Tuesday, Wednesday, I use Friday. But because of the holiday, and then if it's Thursday, Friday, I use the next week. But because of the holiday, I use the next week since we,
Okay.
to me.
So let's use next Friday as an example. One final example here, real quick. So let's say you think that the market is going to stay below. What do you think it's going to stay below next week?
They're playing so many games. I wouldn't be surprised if it's back to 470.
Okay.
I don't know. They say it's this variant, but they've done that before. And then 2 days later, it's like, oh, nobody cares now. Everything's fine.
Well, I'm just saying, if you had to buy a contract for next Friday, what would you buy? Would you buy calls? Would you buy puts? Which way do you think the market's going?
I would buy puts and I would want the wall to be 470 again.
Okay, so in this case, you would.
That's a big difference compared to today, but.
Oh yeah, you're at 459 right now. $11 away, $11 away from 470. So let's just say, okay, you're confident, say, hey, you know what?
The SPY doesn't really, it has done that, but it doesn't move like NVIDIA necessarily. So let's say, okay, we can say then 466.
Okay, that's actually a good spot. So 466. And I'll tell you what, how about we buy the 468? So that's a $2 spread. Let's look at the analyst on it. So that right there is showing that our max profit will be $77 per contract and our max loss is 123. Okay, and again, this is as long as it stays below 466. Okay, so you getting the math on it there. But let's just say you want to be ultra conservative. You go out here and you want to go out here and be very, very conservative. You're extremely confident that it's going to stay below 470. Well, if you do that, you can, like I said, open up the spread and you can go out $5. So now you can still make $70, right at $70 per contract, as long as SPY stays below 470 next week. And what's cool is come Monday, if the market is still at exactly where it closed at, this contract is going to be in the money because you're going to decay money into it, theta decay. So you're automatically, if the market moves nowhere, you're still going to be a small winner on this contract as soon as the market opens because of theta decay. So it's cool, really, really nice. So my suggestion to you, not telling you to do anything, legally, I can't tell you to do anything, but my suggestion, what I would do is if you want to do your puts or your calls, that's fine, but really start reducing, instead of going, say 10 put contracts or 10 call contracts, why not start halving them? At a minimum, do half bear call spreads, half puts. Both are shorting the market. One, you're going to make, you can make a higher return on, but the other one, you have protection and you're hedged. Okay. You can. So
when you say half, you're talking about this type of.
Just take, say you want to, say you want to do $1,000, $500 worth of contracts go into puts, $500 worth go into credit spreads.
Oh, so you're saying do 2 separate orders?
Exactly.
Okay.
Exactly. So that's what that's going to do is that's going to still allow you to make your money, but it's going to give you a nice hedge and it'll make your break even if something goes wrong. Take for instance, this week, if you'd have done that with that play that you did, if you'd have hedged yourself, man, you'd have felt a lot better about that.
Right.
Yeah. But at the same time, if not for the news about the Fed having to speed up its tapering right now, Right now,
Right.
SPY's sitting, probably at 469 right now,
Mhm.
so again, I mean, you can't be mad that you did. I mean, really the news, I mean, it was, nobody could have known that other than the Fed, that news was going to come out that they were going to speed up the taper. So
Did they say how much they're gonna speed it up, like this year speed it up, or they're just using general terms?
Yeah, no, they said that I think it's going to be a double. They're going to speed up their double, doubling their monthly reduction.
Oh.
So that's why the market dumped. So with that said, I would highly encourage you to start taking advantage of, credit spreads to take advantage of the theta decay. Because if you're just with all your naked stuff that you're doing, you are just, theta decay is just really taking advantage of you.
Mhm.
And the other cool thing about credit spreads is, prime example here. Let's just say next week, let's just say hypothetically you bought or you sold your line in the sand is 465, and behind it you bought the 468. Now, what's really cool is, let's just say we open up the market next week and it's at 470.
Mhm.
470. God, if you bought puts, you're wrecked pretty much. I mean, yeah, you're pretty much done. I mean, it would take something just crazy for you to even get back to break even. Where, as with this bear call spread, yes, you would be down on it. But what's cool is you bought a call. So this thing is loaded with profit. So what you can do, what this allows you to do is, if you say, you know what, the market bounced up to 470, this is ridiculous. There's no way it's going to hold that. What you can do now is all this profit that's built up into this 468 call, you can take most or the majority of the profit out of it. So what you're going to do is you're going to sell it in the same order. You're going to go ahead and sell it, take the profit on it, and you're going to buy further back. So you buy, say hypothetically, the 475.
Mhm.
So what that's going to do is that's going to take all your profit out of this 368 call, or most of it, say 75% of it, or 75 to 90% of it. You're going to take that out because you say, you know what, I don't think it's going to, I think the market's going to, this is going to dump, right back, or dump a lot back. So what you've done in essence is take all that profit out of that side, and you've pretty much made your break even, because your break even was originally, let's see, we did the 465, the 468, break even, 466. If you did that, if you take the profit out of that, in essence, what you do is you make your break even now 470. By selling this, you take all the profit out of it, and buy this one further back, you're moving your break even to 470. Now, as long as SPY drops a little bit more, you've turned this, what could potentially be a loser, into an easy winner, because you had a bulk side of the contract. You had, a side of the contract that was making money.
Mhm.
So I know this is kind of, it's kind of next level.
Yeah, no, I'm gonna watch the video probably about a good 10 times, but
yeah,
no,
yes,
this
yeah.
is
So
a lot of
it's
good information.
yeah. So that's what I love about credit spreads, is even if they push against me. So your line in the sand is 365. The market pushes against you. Okay. Normally, like I said, if you got a put in this situation, you're getting wrecked. You're losing everything. Well, thing is, if it pushes against me and I find a spot where I'm very confident that the market is going to reject, or even hold, I can take profit at that spot. And now I've brought my broke even, my line in the sand, to that spot. So in essence, when I sell this and take profit on it and move it back, now the contract really turns into this. Now my line in the sand is 470.
Oh, okay.
Now, keep in
You
mind,
can really get fancy with it, that's for sure.
oh yeah. I mean, it makes your ability to win if you mess up or get the direction wrong, something goes crazy against it. It just allows you to, it gives you another option to be able to take advantage of turning it into a winner. Whereas with naked options, you don't get that. If it goes against you, you're done.
So you make it looks like a lot less, but not necessarily. You're saying you can adjust that with the delta and maybe increasing your contracts a little bit.
Yeah, so yeah, exactly. So you can increase the delta. Like I said, once the contracts, they're subtracted, okay, whatever that total delta is, you can just, add enough contracts to where it equals whatever delta of naked options that you're doing. And you're getting the same movement. Okay, a 50 delta put and a 50 delta total, total delta bear call spread, they're moving the same. It's just one, theta decay is working in your favor. You have a line in the sand. This side, theta decay working against you, and it better move quick or you're going to lose all your money. See the difference?
Yeah, definitely. I see the difference.
So I hope I made that as clear as muddy water. I've just been.
No, this is very, very helpful. Thank you so much. So I know that you have a lot on your plate and it's still holiday weekend. What time do you think you'll be dropping the video?
Oh, this video right here?
Yeah.
I will, yeah, I'll make sure it's up and ready to go for this evening.
Oh, cool. Okay.
Yeah.
Because I want to watch this again and maybe do some mock trades with the strategy.
Yeah, nothing wrong with nothing wrong
And
with
the
that.
Bookmap is just very helpful too. I love it. Like I posted, I saw it years ago, not years, but maybe a year ago, but didn't really, I was like, oh, that seems like it would work great. But then I didn't want to change brokers. And then now Thinkorswim has it. So that's great.
Which I mean, you can have it independently. You don't have to. That's the cool thing too. You don't have to have a.
Yeah. See, I never knew that until recently.
Yeah,
I thought you had to have whatever brokers they partnered with or something.
Nope. No, you can have it. That's just if you want to trade through Bookmap. If you want to put your orders in on the Bookmap chart, then you need to connect it. But I mean, I don't want to put my orders in through Bookmap. So yeah. It's a no. It's a thank you, but no thank you for me. All right, so I flipped everybody back to the order book real quick to close our session. All right, so what do you see the market? The market's going up. So what does that tell you the SPY did?
The SPY reversed and started going up.
Yep, NVIDIA's up, mRNA's up, Roblox is up. That automatically tells you, oh, SPY found a bottom and it reversed. So, and then, if you flip over, if I flip you over real quick to the, flip you over real quick to my screen. This screen. Can you see it?
Yes.
Okay. All right. So get these off of here. All right. So we see our SPY reversed. Now for me, the entry. So Misha, prime example, you trading with a SPY. Okay. What happens is it comes up here and I start getting support candles on these algos. Okay. Support candles here and on this, I'll tell you, you want to know what this moving average is? It's a very moving average. You definitely want to have on your SPY for anybody that's trading SPY regularly throughout the day is the 3-minute 50 MA. 3-minute 50 MA. Okay. Because look at its case. This is the green. You see the green? It's this green line here. Whenever I see SPY get up under the 3-minute 50 MA for day trading purposes, I'm looking to the downside. Okay, you see here, it got below it, rejection right there, pushed back up to it, rejected, and then came on down, pushed back up to it, rejected, stayed below it, came up to it, rejected off of it again, finally, support candles on it, and pushing up. So you got
would you have taken a call? Or maybe that would have been a bear call.
No. Again, you think it's going up, so you want to bear a bearish position, or do you?
No, I thought you call it the opposite.
I
want a bullish position.
So it's a bullish. What's it called? A bullish what? A bullish
call.
No, not a bullish.
The bullish
not a-
put spread.
Yeah, okay, all right, so there you go. So
Excuse me.
on the bullish put spread, you put your line in the sand. Say in this case, you would say, okay, my line in the sand is 358 or 359. I think it's gonna hold this B1 or this algo, these algos right here at 359. My line in the sand is 359. So I'm gonna sell the 359 put, and then I'm gonna buy one behind it for my hedge.
Ah, okay. Would that have made, I mean, for a day trade, would that have made
Yeah, yeah. 'cause
money
if-
coming from the 359 line?
Yeah, you would have made.
I mean,
you would-
it's,
right now, that contract would be like max profit, like whatever it was at that point, because again, the market's already pushed, almost $2 from these algos and the 3-minute 50 MA. Yeah, I mean, that contract would almost, it would have probably 70, well, the market's about to close. So no, it would honestly be around 90% profit in the contract. Yeah, so what your max profit, yeah, you'd have 90% of your max profit right now from that contract. So.
oh, I like that.
Yeah. So yeah, I would definitely encourage you. Again, the algos and all that, all that stuff will be in the Precision Indicator course 2.0. But
Awesome.
for now, make sure you get this 3-minute 50 MA on your
Okay,
chart.
well,
And you know how to put it on any time frame, right?
no, what do you mean?
Do you use
I mean-
do you use TradingView?
When you say any time frame, it's like I'll just add the moving averages and then you just switch your time frame by.
No, you can have any moving average from any time frame on the same chart. Because take for instance, right now this is a 1-minute chart of the SPY, but yet I have a 3-minute 50 MA on there.
Oh, I didn't know. Okay, no, I wasn't aware of that.
Yeah, and you know what this red line is right here? This is the 5-minute 50 MA.
Oh, that's great. Okay, I didn't know that.
Yeah, well, the precision indicator course that I have it, it have it all in there. That's why for me, because instead of having to flip to different time frames, I can get all the moving averages that I want, all my important ones on the same chart.
Right.
So
But what was your suggestion though? You said do a 3-minute 3-day?
yeah, so the 3
The
minutes,
green?
yeah, the 3-minute 50 MA.
Oh, 50. Okay.
Yeah, so it's the 3 minutes on the 3
Because
minute
I
time.
do like the 50 for the SPY, but I always just switch my time frames per chart.
Yeah, well,
Okay.
see, I don't,
Yeah, that's easier.
I don't have time. I don't have time to flip through all my chart. Now here a prime example over here on Tesla. Look at all these different moving averages I have on here, all from different time frames. This is the 5-minute 50 MA. This red one right here. This maroon one up here. That's the 15-minute 50 MA, and you can see that's exactly where that Tesla rejected on it twice today. Rejected on it here. Rejected on it here. Okay. This down here, this big one down here, this should be the 13, I think this 13 MA daily. Yeah, the 13 MA daily down here. This blue right here is an algo. This is an algo. But yeah, and this is a VWAP. But yeah, it's pretty cool to to have it all on one chart.
Have it all right there, one chart. I like that.
Yeah,
It gives you confirmation as it's moving because you're like, okay, if it breaks through the 5-minute,
yeah,
then I'm gonna stay in. Or
because if you're on the, say you're on a 5-minute chart and all you can see is the 5-minute time frames, well, you may have no idea that, oh my goodness, I'm about to run into the 15-minute 50 MA. That's a huge level. Or the 1 hour, the 1 hour 50 MA, another huge level. So yeah, with that said, having them all on one chart along with my algos, I mean, it gives me an unfair advantage. I mean, it really does. So again, that's again, the Precision Indicator course 2.0. Like I said, it's going to have. Honestly, I want to make this. This will be, the last one that I ever make, because honestly, I mean, it's going to have everything that you need. So Because again, I
That's
like that.
awesome.
You know, some people, you know, take for instance, you can have some people that, you know, think lagging indicators, moving averages and stuff like that, you know, think they're just the best thing ever. It's like, yeah, well, at the same time, you're lagging. You know, it's great. I love my lagging indicator course. I mean, lagging indicators. That's why I've made, this will be my second indicator course, and it'll have half of the indicator course will be lagging, you know, half of it will be lagging indicators, you know, because they serve a purpose. But yeah, it's extremely
Thank you
valuable.
so much. This has been extremely helpful. I appreciate you.
Yeah,
You know,
yeah, no,
spending your time showing me this.
yeah, no
you.
problem, no problem at all. I appreciate everyone that that came and supported us this morning. Yeah, it seems like we got a few participants left.
Yeah,
so,
I think we ran them off. Did we run them off? I hope they didn't.
yeah,
Maybe they watched your credit spread video and they were able to get it the first time around.
yeah. Well, they didn't want to hang around no more. But now I can't blame them.
They just want price targets now.
Yeah, they're like, hey man, tell me where this stuff's gonna reject at. Which if they were here, they would have hung around a little bit longer. I could have told them, I'd be telling them right now that they could have jumped in right here at 319. At these 319 sellers here at the VWAP on NVIDIA, look at that. Pushed right to them, rejected down all the way down to 317. So that would have been an easy winner if they would have hung around, but they didn't. So
Go watch the video and go, oh my gosh, darn it.
Yeah, that's what they get. You know, they missed some easy money there, because I would have definitely called that one out for them big time. But anyway, so I hope I hope that helped you out today, and I appreciate
it. Was very helpful. Thank you so much.
Yeah, I had a good time, and like I said, I'll post this this afternoon. Okay.
Okay, great. Thanks so much. God bless.
All right, thank you, man. You have a good rest of your day.
You too. Bye-bye.